25% of businesses fail in their first year. Over the next 5 years, that number doubles to almost 50%. If you're a business owner, you have to know that the odds are stacked against you from the very beginning. So in this video, I'm going to show you a powerful tool that's helped many business owners reach the next level and that will ultimately ensure the financial success of your business as well. But first, I'm going to show you the real reason why most business owners fail and never grow to achieve financial freedom. Growing a business is hard. I learned this lesson firsthand when I started my car rental business over 5 years ago. Everything was easy in the beginning as I used my personal funds and credit to start the business. But I soon realized that this is a recipe for disaster once the business is established and then you're ready to scale and go to the next level. I found myself in a boatload of personal debt and barely staying above water due to business expenses. Using my personal credit was also killing my credit score in the process. I had to find a solution that would help my business grow without using my own funds and credit. And this is the reason why most business owners fail. They try to grow their business using their personal income. This is almost impossible unless you have a super high paying job making multiple six figures. And this definitely wasn't the case for me. Most of us have been stuck in a week-to-week rat race working a 9 to 5, which led us to starting a business in the first place. With the prices of everything around us going up, how can you really have enough disposable income to not only pay your bills, but support a growing business with its own expenses? You can't. And this is why you're bound to fail if you continue to do this. And it could get even worse if you're trying to fund your business using your credit. Not only will this get you in debt fast, but it'll tank your utilization rate, causing your credit score to drop quickly. This can ruin your chances at mortgages, getting more credit, and the ability to take advantage of future opportunities. This is why the most successful business owners use the strategy that I'm going to show you next to grow their business without putting their personal finances at risk. Let me give you an example. Think of some of the most successful businesses out there. Facebook, Apple, Google. They all started as very small projects in like a garage or a dorm room with the owners using their own funds to start the business. In this stage, they all struggled to get the business off the ground. And if they didn't find the resources that they needed to grow, there was no way that they eventually become the trillion-dollar companies that we all know today. But how do you come up with the extra money needed to blow up your dream business? During the early stages of Facebook, Mark Zuckerberg received $500K from an investor to help his business get to the next level. To grow Apple, Steve Jobs was able to secure $250,000 of outside money to help invest and grow his business. Do you see the pattern here? Both business owners had to stop relying on their own money and find the capital they needed from outside sources with bigger pockets. The same thing applies to your business if you want to be successful for a long time. But how do you do this? Well, let me show you how you can obtain the capital that will skyrocket your business to the next level. And you can use this capital for business expenses like marketing, equipment, more employees, even a physical location. These are all investments that can grow your business quickly. And by doing this, you won't have to use any of your own money out of pocket. The answer is business credit. Business credit is the ability of a business, not a person, to be able to borrow money to pay for business expenses and invest to make it grow. Business credit is similar to personal credit in some ways, but still very different. Instead of getting credit cards and loans in your personal name, this allows you to get lines of credit and loans strictly in your business name. Your business will even build its own credit profile and score over time. And because it's tied to your business and not your personal name, using it doesn't count against your utilization and hurt your credit score. And because running a business requires a lot more money than just normal living expenses, the capital you get from business credit is usually a lot more than you would from personal credit. You can easily secure 5 to 6 figures of business credit to invest in your business. Think about how long it would actually take you to save $10, $25, even $100,000 to put into your business. With business credit, you can access that money quickly and a lot more easily than having to work your 9 to 5 for it. And that is the beauty of business funding. Now, don't get it confused. This is not free money. You pay interest on the funding that you receive over time, which ultimately means you do pay back more than you actually received up front. That's how lenders like banks and credit card companies make their money. But ultimately, the goal is to make more money with your business using the credit than you would pay back interest over time. Or in some cases, make the money to pay back the credit you're given before interest even starts accruing. And these are Jedi level plays that can blow up your business quickly. Now that you know what business credit is, how do you know where to get this powerful business tool from? Next, I'm going to show you the best place to get it to ensure your business is successful and that you get the most money possible. There are multiple places you can go to obtain business credit. Which option is best for you will depend on your business and the type of credit you need to grow it. To explain the different types of business credit lenders, let's break it down by using what I call the cubes method. C stands for credit card companies. Much like personal credit cards, companies like American Express, Discover, and Capital One also offer credit that's specifically for your business. This option is best if you or your employees need the flexibility of a credit card to be able to charge business expenses to directly. They are more convenient and safer than carrying around cash, especially for large purchases. Plus, a lot of credit cards give you additional benefits like rewards points just for using them. On top of being able to grow your business, you can then use these rewards points for discounted flights, travel, and even cash back. I traveled to places like Bali, Brazil, and Canada for the low, all by using the rewards points just from using my business credit cards. The next letter in the CUBES method is U. This stands for unions, specifically credit unions. Credit unions are nonprofit institutions that provide financial services. This includes accepting deposits, making loans, and offering various financial products. Although you must become a member to join most credit unions, this can also be a good thing. Credit unions are very member focused, and often they aren't as strict as more traditional lenders when it comes to offering business credit to their members. This is really good for business owners who may have a lower credit score, but maintain a great relationship with their credit union. The next business credit lender in the CUBES method are banks. Banks are financial institutions that are similar to credit unions, but they aren't member-based and they work on a for-profit basis. Banks are the biggest and most common providers of business credit. Although lender requirements can be stricter than credit unions, banks tend to have more locations and many different types of financial products that they can offer your business. Remember, your business isn't limited to just one type of lender when it comes to business credit. It's actually best to have a mix of different types of lenders. That way you're able to develop multiple relationships and take advantage of the benefits that different types of lenders offer. The next letter in the CUBES method is E. This stands for e-lenders. These usually come in the form of fintech companies. These companies are innovative business credit lenders who use financial technology to integrate with your business. Although they don't have physical locations, these lenders do have sophisticated online tools and dashboards to help keep track of your business finances. Fintech companies are also gaining a lot of popularity because they don't rely on traditional methods like checking your credit score or building relationships to approve you for business funding. This is another great option if you don't have the best personal credit, but already have good revenue coming in from your business. And I'm proud to announce that one of the leaders in this space is also the sponsor of today's video, and that is Revenue. Revenue provides flexible business funding that is built for all businesses. Instead of judging your personal credit, Revenue uses technology to provide you with capital purely based on your business. And once approved, you can get access to your business funds in as little as 24 hours. This can be a game changer as a business owner, especially if you need capital quickly. Not only is the Revenue funding process fast, but it's super simple and can be done in as little as 5 steps. Revenue is available to US-based businesses that have been established for at least 1 year. You also need a separate business bank account and at least $20K in monthly revenue. Revenue isn't available to sole proprietors, but every other business type qualifies. While traditional lenders continue to change their requirements every other day and make it harder for business owners like yourself to access the capital that you need, Revenue is simply one of the best options to skip the red tape and personal credit roadblocks when it comes to getting your business funded. They allow you to access the capital that you need to take your business to the next level quickly and easily. So if you meet the Revenue criteria and you want to secure a bag with them in as little as 24 hours, make sure you hit the link in the description below and apply for Revenue financing today. Let's get it. Now, for the last lender in the CUBES method, you have the S. This stands for suppliers. Not all business credit lenders offer capital in the form of money. Suppliers and vendors specialize in providing physical supplies for your business. Office supplies, equipment, even gas. This form of business credit is the easiest to obtain and is a great option for newer businesses who may not qualify for other forms of business credit yet. And doing business with vendors and suppliers also helps you build out your business credit profile. This will help you secure higher forms of business credit in the future without the need of your personal credit. Understanding business credit and where to attain it is the key to ensuring you always have the resources your business needs to grow and lead you to financial success. But here's the thing, even though you now know what business credit is, there's still one more thing you have to understand if you want to attain enough of it to take your business to the next level. So watch this video next where I show you how to avoid getting denied business credit and start getting the approvals needed to skyrocket your business.